All right. So my name is British Griffiths, and I am a SIF support staff. Welcome again to the 2024 Virtual Fall Mixer, Scaling for Success, Supplier Development Tools for Farms and Food Businesses, hosted by the GFPI team, the Good Food Purchasing Initiative team here at SIFPAC. We work with our partners across the Chicagoland food system, and we aim to make a more equitable and transparent, local, sustainable, fair, humane, and nutritious food system. Our work includes shifting institutional procurement through the Good Food Purchasing Program and also uplifting our suppliers with resources and events such as this. And I want to thank you all again for taking time out to join the session titled Preparing for Tax Season and Working with the Tax Preparer, led by Sarah Hoerner of Compeer Financial, and I will hand it off to Sarah.
Hi, everybody. I'm Sarah Hoerner. Well, already messed that up. I'm from Compeer Financial, and if you're thinking, what's Compeer Financial? Can you guys hear me?
Sarah, I think
There.
you just froze, so we may want to
Yes,
restart
it did.
the introduction.
So let me stop sharing that. Sorry, guys. I told her I was concerned this was going to happen. That's always a concern of mine that's going to happen right away, and it did right off the bat. All right. Can you guys see the screen now? Can you hear me okay, British?
Yes, I can see you. I mean, I can see the screen and I can hear you. And if
something happens again, I've got a backup in place. I will be on within 5 minutes. So I have a backup in place. So anyway, what I was saying is I'm with Compeer Financial. We're part of the Farm Credit System. The Farm Credit System was created by Congress in, I think, around 1916 to provide lending for rural areas. What we do now is we serve all of agriculture, right? So it's not just rural areas that have trouble finding financing if you're a farmer. So I am their emerging market specialist, which means I cover the northern half of Illinois, and I go to Chicago a couple times a week, and I work with urban growers that farm on a lot in the city, and I have farmers that farm on hundreds of acres outside of the city. So we deal with direct consumer and value-added processors. So think farmer market farmers all the way up to creameries making their own products and selling them all over the country. So today we're going to talk about preparing for tax season and working with a tax preparer. Real quick, I just kind of want to put this out there, and I'll mention this again. This is not going to show you how to do your taxes. Our tax laws are incredibly nuanced and complicated. And so this is basically, what do I need to do as a farmer to get ready for tax season, okay? So with that, let's get started. If it lets me. There we go. So what we'll cover today is just some tax basics. We'll talk about the Schedule S. What is a Schedule S? We'll talk about the 3 out of 5 years rule. We'll talk about what you need to do to get ready for tax season, and then we'll go through an example with a tax professional and one with a tax professional. And then finally, some final tips and thoughts. So let's talk about some tax basics. Like I said, this main goal is to show the basics of farm tax returns and how to get ready for working with a tax professional. Our system is complicated. It is very complicated, especially if you have your own business, it can be complicated. So I highly recommend that you find a tax professional, and preferably one who understands farm taxes. I will at this point say we are having a hard time finding tax preparers in Chicago and the Chicagoland area that understand farm, even small farm. We're working on it. I'm working on finding a list of people that are like, yeah, we will take farm clients that are in Cook County and beyond, right? So if you happen to have a tax preparer that knows your farm, knows your business really well, and you like them, I will gladly take their name. Feel free to share them in the chat. But we are trying to put that list together. So stay tuned on how well I'm able to get that done. I'm working hard on it. The next thing we're going to talk about is doing your own tax. And the next thing is doing your own taxes could cost you money or leave money on the table. The example I'm going to give is going to show that, right? I had a client one time that they did their own taxes, and you know, they were very smart farmers, everything, but they weren't tax preparers. We could tell. I could tell by looking at their tax return that there were certain credits they weren't taking advantage of. There were certain deductions they forgot about. Some of the numbers didn't equal out. And if they ever got audited, it was going to be a mess to try to unravel that. So a tax preparer, every year they have to go through a tax training to know about new laws and rules and regulations. Take advantage of that knowledge when you use them. Ask them a lot of questions. Now, tax planning is an important part of running a business. It is part of your budgeting, right? Like, do you need to make quarterly deposits? Do you need to file a tax return at all? These are things you need to think about well in advance of the end of the year. You know, I would start now. If you have your own business, I would start tax planning now, because if you wait till December 31st, it's not enough time to make any adjustments, really. If you wait till January, for the most part, it's too late. And the last thing I want to mention is you must file a tax return every year, even if you did not make any money. So if you have a farm operation and you didn't make money, you still have to file that Schedule F with the 1040. And we'll talk about what those terms mean here in a minute. So let's talk about some common non-farm tax documents. So all of your tax return is called a Form 1040. Everything you have as far as income and deductions is reported on that form, okay? If you have kids, it's reported on that form. So the 1040 is kind of the catch-all for everything. It's where everything kind of just gets condensed in the numbers, and this is your tax liability, and this is how much you owe. The most common thing that most of us do receive or have received or will receive in the future is a W-2. That is the tax form that your employers give to you as an employee, and it shows your reported wages that they paid you and the taxes withheld from them, okay? Very important form. Those have to be out by January 31st. 1099s are another important form. If you have a rental property or you are renting out the lot next door to a farmer, they will give you a 1099 miscellaneous. Those also need to be reported. Non-employee compensation. As far as I know in Illinois, Uber, DoorDash, all those type of drivers are 1099 contractors. So they're not technically employees. Those are 1099s, and you have to file them with your taxes. That one's an interesting one. I saw a guy on TikTok the other day that's saving for a house, and he just does DoorDash all day, and he kind of travels around with his car to different cities and just does DoorDash. And he's like, I made $800 a day. Well, he didn't really make $800. Of that $800, he still has to pay income tax, Social Security, and Medicare out of that yet too. So there's, you know, if you do, if those 1099 contractor positions, you do have to pay taxes on them. Then you have interest income. So if you have like a savings account or a CD at the bank that earns interest and it's above a certain amount, they're going to send you a 1099 interest form, and you have to file that with your return. Then finally, you have the 1099-R, which is all the distribution from pensions, annuities, IRAs, basically your retirement stuff. The R stands for retirement. Like I mentioned to you, most of the documents listed above need to be sent to you by January 31st. Some documents don't have to be mailed to you by January 31st, such as like a K-1. I think that's March 15th. But if you are missing a document and you know which one it is, I would Google and see when you were supposed to receive it to see if they're behind the 8 ball on that. So let's talk about a Schedule F, and you're probably thinking, what is a Schedule F, Sarah? Valid. The Schedule F is the profit and loss for farmers that gets filed with the 1040, with your tax return. So this is where you're going to take your farm income and your farm expenses and report them to the IRS. It goes from the Schedule F to the Schedule 1, which the Schedule 1 basically consolidates and puts everything in as far as net income and losses from rental properties, Schedule C, Schedule F, any other schedules you have, it goes here. And then it goes to the Form 1040 for to be added all together, so they know your adjusted gross income and what your taxable income is. The Schedule F is very important to farmers if you are interested in USDA loans. They require at least 3 years of farming experience. 3 years of a Schedule F shows that you have been managing and running your own farm. There's no question about it, right? You're talking the federal government, filing that Schedule F goes to the federal government. The USDA recognizes the Schedule F for those USDA loans. The beginning farmer loan, the 50/50 program to buy land, microloans through them, all of that. You need a Schedule F eventually. They have loosened the rules on those a little bit because you have some farmers. The most recent one, I was talking to some farmers that work on a farm on the west side of Chicago, and they don't own the farm, but they manage it day to day. They kind of run the farmers market. They're clearly running the farm, but they're hired by somebody else. They're not going to have a Schedule F, but the FSA, the Farm Service Agency, which is under the USDA, they will recognize that as management. At least most of their loan officers will. There's a lot of beginning farmers that work with mom and dad. They put sweat equity in. They don't actually get paid. So they're not going to have a Schedule F yet, but they count that as farming experience. So the sooner you start filing a Schedule F, the sooner you will be eligible for those USDA loans. And those USDA loans have favorable terms, lower down payments if you're buying land, lower interest rates than a lender such as myself or a bank can offer. So just kind of keep that in mind. The other thing this does is this will show traditional lenders your evidence of income, right? When we ask for your tax return, we are basically looking at that Schedule F and saying, here's their income statement from last year. Here's the revenue they had, the expenses, and then net income or loss, net profit or loss, okay? So if you're looking to get a loan, if you have a Schedule F, it shows that lender that, hey, it's not a hobby, it's an actual business. My request is for the business, right? Here's just kind of an asterisk on this. Positive net income means you're paying self-employment taxes and income tax on net income. When you farm, you're either going to have a net loss or a net profit. If you make money, it's a good thing when you make money, and that means you have to pay a little bit of tax. It is not a bad thing to pay taxes. I have seen farmers that have messed with their taxes for their entire careers, so they didn't have to pay any taxes. And then when they went to retire, they really didn't have any income to retire on because they never paid in to Medicare and Social Security. And I'll give an extreme example of this. There was a farmer that every year he bought new equipment and he just depreciated it on his taxes. So he never had positive income on his Schedule F. He never paid taxes on his farm income. And farming was the only thing he did. He passed away suddenly, and that spouse of his was a stay-at-home mom who didn't have any income. She had no retirement. There was no Medicare or Social Security benefit that she would get from him because he never paid into that system. So paying a little bit of tax is a good idea. Managing your tax liability is part of the tax planning process. But again, paying taxes is not a bad idea. It is a good thing to do because it means you're making money. Even in years where a farm did not have positive net income, you have to file those taxes. The IRS wants to see the negative tax return or negative Schedule F, and that's fine. It happens in farming every now and then. The weather isn't good or something happens where you have negative. So let's look at the actual form itself. As you can see up top, it just looks very much like your regular tax return. You have your Schedule F up there, which is part of the 1040, your name, all that stuff. What kind of principal crop or activity are you doing? You put your revenue in part 1, and then your expenses go in part 3, and then line 34 would be where your net profit or loss goes. Then that goes to Schedule 1, which then goes to 1040. This form is a very good way to set up your book, your accounts. If you're doing your books on Excel, it's a good thing to use this form as a basis. And we're going to talk about that here in a little bit. So let's talk about the 3 out of 5 years rule. I have had a number of clients that said, my tax preparer says that because I'm not making money, I'm not a real farm, and I need to make money 3 out of 5 years, otherwise I'm considered a hobby farm. That could happen. I have not seen it happen, and I found a really good article that kind of explains how to mitigate that a little bit, because as a beginning farmer, most of us will not make money in the first 5 years. Most farms take 5 years or more to make money because of all the investment you have up front in them, and you're working on building your markets and your revenue sources and everything. So again, if a farm does not have positive net income in 3 out of 5 years, the IRS can consider them a hobby farm, which means the farmer cannot use losses to offset other income. Now, what does that mean exactly? It just means when you have negative net income, it means every single expense you have is being deducted from your revenue. In this case, if you are considered a hobby farm, they will, and you have $10,000 worth of revenue and you got $12,000 worth of expenses, they won't let you use that last $2,000 to go into a loss. You basically are net zero effect. Okay. Whatever your revenue is, that's what your expenses are. Now, like I said, I have never seen, knock on wood, I've never seen the IRS go after anybody, but you never know, right? They don't have a ton of employees right now. Maybe they won't, but this is something to consider and something to talk to your tax preparer about. This website below is a really, really good reference. Look at that website, see what this all means, and I wanted to highlight the things that he mentioned to help avoid being considered a hobby farm. You need to show profit motive, right? That you're a farm who is doing all things a normal business does in order to make a profit. Whether you make that profit or not doesn't matter so much. You need to run your farm as a business is what it's saying. It can't be run as a hobby, basically. You need to maintain detailed records and things any business would need to do. You keep receipts, you keep invoices, farm records, in other words, keep your accounting book. All this stuff will show any tax preparer that, hey, I am an actual farm business here. Here's what I'm doing. I may not be making, $100,000 a year at it, but I'm still making money at it, right? So keep that in mind as you're doing your taxes. And if you want more information, this was written by, I think he's a farm law professor at Ohio State University. And this was a very good read, that website. So give that website a click if you want more. So, and now you're saying, Sarah, how do I get ready for tax season? Well, first, you're going to gather all those non-farm related tax documents that you saw from slide 4. Most of us farm on the side and we have a full-time gig elsewhere, or maybe we do the DoorDash thing or Uber, all that to kind of help bring in money for the farm operation. All those documents need to be gathered, okay? What I do is I take those documents and I push them off to the side. Those are my non-farm ones, and once I gather them, once they're sent to me, I don't think about them again. I don't need to do anything other than hand them to my tax preparer. For the farm, you're going to need an income statement or a profit and loss statement. Basically the same thing, something that shows your revenue, expenses, and net profit or loss for a given time period. The time period in this case will most likely be January 1 through 12/31, December 31st. That's most people's tax year. I have yet to see a farmer that doesn't have that as their tax year. So you're going to need an organized and detailed list of your expenses and your revenue. If you organize them correctly and they're very succinct in their manner and you don't have a lot of notes all over that people have to go searching for things, you can save time and money with a tax preparer. I had a client once that was saying, well, I love my accountants, but they cost me an arm and a leg. And I said, really? And she's like, yeah, I don't know why. And then we started looking at her accounting book. And I said, this is why. She had like 30 different categories. She was drilling down all of her expenses to such a detailed level that as her tax preparer, her accountant, had to look at each line item one by one and determine whether it was seed, whether it was fertilizer, was it insurance cost, was it labor. They had to distinguish which category on the Schedule F it was and then drill it down that way, okay? So remember when I said if you look at Part 2 of the Schedule F, those are your expense categories. Those are the categories you use to designate your expenses, okay? Keep your records simple. You're going to have a column for those categories and then a column for your amount. What does that look like? Well, let's look at an example, and then let's look at a simple P&L statement. So let's meet Jane Farmer. Jane Farmer operates TLC Farms. She sells vegetables to a local distributor, has invested some fruit trees, and raises chickens for eggs. She earns $46,000 in gross vegetable revenues and $3,500 from sales of her eggs. Her expense total is $51,375, and that's mostly spent on the vegetable production. The biggest expenses for her this year were fertilizer to help mitigate less than desirable soil conditions, seed, and she had to overhaul a tractor. She had a little tractor and she had to overhaul all of them. So that was very expensive. Let's look at her P&L. Her P&L is on the left there, and it's very simple. Much like the Schedule F, you have your income on top, you have your expenses, and then you have your net cash farm income. Okay, so income on top, income revenue on top, then your expenses. She kept it simple. She used expense categories from the Schedule F and then had a few miscellaneous categories. There is an other section on the Schedule F. So if you are paying to go to farmers markets, those fees are tax deductible, and those can go in fees due and subscriptions, which are in the other category. If you pay a tax preparer to do your farm taxes, that's for a business purpose. You can also deduct those. If you need to use an attorney for something for the farm, that is a professional service you can deduct as well. If you use a point of sale system, that's a farm expense. So all those things get into these categories. And so whatever is in Part 2 of the Schedule F, those are the categories I recommend you use, and keep the miscellaneous or the other categories to a minimum, okay? Now, net income is your income minus expenses, okay? So if you look, she didn't make money this year. She lost $1,875 in the end, okay? So let's take a look at what happens with a tax professional and without a tax professional. So she decides, I'm not that big of a farmer. I don't need to hire a tax professional. Okay, so if you look, she just took her P&L, her income statement, if you will, and just transferred it over to the Schedule F. Everything just transferred over nice and easy. You can see that the net income matches the line 34. She's got negative 1,875 listed. She's got her eggs and produce listed up top. She's got all 51,375 listed in the farm expenses. When I hand my farm books to my tax preparer, this is what it looks like. It literally has two columns, and then he puts it in this form. Okay. Now, she didn't make money this year, right? She didn't have to pay taxes, which, okay, great. You didn't have to pay taxes, but she also didn't get the benefit of having to pay taxes, the self-employment taxes, the Social Security, the Medicare, that sort of thing, which matters later on. So let's look at what happens when Jane decides to hire a tax accountant. So if you notice, her P&L didn't change, but yet we somehow have $5,004 as net profit or loss. So what's the major change? Well, her tax preparer asked what she did to that tractor, and he determined that what she did to that tractor has expanded the life of that tractor drastically. And rather than paying for all $10,000 in repair bills in 1 year, he's going to deduct that over the next 3 to 5 years. And so the repair bill went down to nothing, and he moved it over to depreciation. So that's $3,121 for the repair of the tractor rather than $10,000. Okay, and that was enough to put her into positive net income. Now, if you were to take this into a lender and say, hey, this is my taxes from last year, this is a huge plus to have a positive net income, right? I recently was talking to someone in the city that was trying to get lending. And this is before they knew that Compeer was in the city. They were trying to go through the lenders up there. I don't know if it was Chase or Bank of America, who, but they needed 1 full year of positive net income, right? And year after year, they were starting, and it took them, they were beginning farmers, so it took them a while to get there. If you are doing your tax planning and can make it so you have a little bit of income and you pay a little bit of tax, it makes getting a loan down the line that much easier, okay? So let's look at some of the differences. We just talked about that. Her Schedule F net income went from negative 1,875 to a positive 5,004. She made money. That's amazing, right? On her taxes, she made money. Jane's tax repair, again, asked about that repair bill for one tractor. That's something even as myself as a farmer, I would not know to ask that. I really depend on my tax repair to help me with the depreciation part of it. It's like this back end calculation. I'm good at planting the crops, harvesting them, selling them, that sort of thing. I am not good at figuring out the back end calculations for depreciation. That is not my specialty. I do not understand the tax law that in depth to be able to do it safely, at least, and correctly. So again, she determined that it extended the life of the tractor. So her repair bill went from 10 to 0, depreciation to 0 to 3,121. It reduced Jane's farm expenses by 6,879, which increased her net income. Jane will have to pay income tax and self-employment tax on her farm income. And I know you're thinking, why would she be happy to pay tax? Well, she made money. That's a good reason to pay tax, okay? If you are purposely having so many expenses so that your net income is less than 0 to avoid paying taxes, you are giving up long-term gains for short-term gains. And I'll kind of explain that a little bit later. So as you can see, that tax professional really helped her, right? He can also help her in the future, like, hey, I'm thinking about purchasing this. How would that affect my taxes? She can call him throughout the year if she's thinking about doing something like, how is this going to affect what I'm doing? I'm thinking about bringing in a partner, or I'm thinking about starting an LLC. How would that affect my taxes, right? These are all things that a tax preparer, an accountant, attorney, and a tax preparer, they're all going to be able to help you in some way, in a different way, to know what to do. I always say, you don't need to know everything in farming. You need to know a lot of things, but the best thing you can know is who to ask, right? And asking your tax preparer and using them is a very good idea. So I'm going a little bit faster than I thought, but we're going to keep going here. So like I mentioned, you want to optimize taxes in the long run, not eliminate them in the short run. Don't be like that farmer that never paid taxes and then left his family with nothing, right? Paying a little bit of tax means your farm made money. So as much as I hate writing my tax check every year as a farmer, the way I look at it, I'm like, well, you made a little bit of money. That's not a bad thing, right? Makes my financing go easier. It's less questions when I talk to my lender, okay? The other thing I want to mention is when you're starting off farming, having an off-farm job can help offset losses and improve your financial position for your farm. What that means is it gives you more flexibility to do different things on your farm, okay? It can help absorb some of those losses you have as a beginning farmer. So if you're starting to farm, or you're starting a farm business of some kind, or an ag business, I highly recommend you keep your off-farm job if you can, or find an off-farm job that will help offset your investment in your new operation, okay? And the best way to know that you're taking advantage of all applicable credits and deductions is to work with a tax professional who understands your farm business. That last part is very important. Again, I'm working on a list of names on folks who will work with people up in Cook County and the surrounding counties, but agriculture is not as prominent up there, so I'm having a bit of an issue finding some of those folks. But I'm hoping to have a name for you shortly, or at least a list of names, or a company that is willing to do it. So understanding your farm business is important because they're not going to ask you the right questions to get to the right answers, okay? So your losses in one year can cost more taxes in another year. So just writing those losses is not a great idea. What was the other thing I was just going to mention to you? That's going to come back to me. So my final thoughts, and again, I went rather fast here, is the key to tax planning is being detailed and accurate farm records. You need business management, okay? You need throughout the year to update your accounting books, check what your revenues are, check what your expenses are, and adjust accordingly, okay? If you're growing something that is not selling at all, cross it off your list for next year. If you have something that's a cash cow, like tomatoes or peppers, or maybe you can your own salsa, or you do, have your own tomato sauce or pasta sauce or jams or jellies, keep doing that. right? You can send your expenses into your tax preparer and let them determine, well, this is tax deductible, but this isn't, right? Send it into them in an organized way, and they'll be able to tell you, we can deduct that, but we can't deduct this, okay? And always start tax planning prior to the end of the year. If you do wait until December 31st or January 1st to tax plan, it's probably too late. Most places I know, they close at noon on the 31st. So if you're going out there and you're expecting to purchase more expenses to offset some of that income, you might have a hard time doing it, right? The other thing is accurate financials for your taxes. I don't know, I'm assuming some of you folks know QuickBooks or are considering QuickBooks for your operation. QuickBooks is a wonderful way to track your financials. I will say that if you do not input it correctly into QuickBooks, it does not flow over. I think it's TurboTax that it flows over into. It does not flow over correctly into TurboTax. You have to enter it in exactly right on the front end in order for it to flow correctly to your taxes on the back end. This is another reason I'm recommending you actually work with a tax preparer and not try to do this by yourself. Because having done accounting books for close to 20 years now, I can tell you there's different ways to do these things. And if you aren't exact in it, or you don't realize that something doesn't balance or something is in there incorrectly, then that can affect your taxes on the back end with QuickBooks, okay? Always double check your work. Does it make sense? Balance your books against your bank account, okay? Most of us will file on a cash basis. So whatever income we receive, whatever cash we receive is your revenue, and whatever, bills you paid, those are your expenses. That's it in a calendar year. Some people use their bank accounts as their financial books. It's a good way to build your financial books. So if you have one account that's just for your farm or your business, then you don't have all this other stuff intermingled with it, right? So if you're looking for more details, well, what did I have for expenses? You know it's in that account, okay? So think about separating out those accounts that aren't for your business versus personal. The last thing is I want to give a quick plug for our emerging markets Facebook group, and there's my contact information. I am presenting the one I think at 2:00 as well, and that's going to go into more of, as a lender, what do I look for? We're going to briefly talk about balance sheets, cash flow projections in that one, and talk about lending in that one, and how to get money and things to watch out for and everything. So hopefully that wasn't going too fast. Does anybody have any questions?
Catherine, I see a question in the chat around costs for accounting tax prepare.
It depends. It depends on how complicated, let me do this. It depends on how complicated your tax return is. I'm going to try to, have I stopped sharing, British? Am I still sharing?
No, we just see your face, not the presentation.
Okay, good. So it just depends on how complicated your taxes are. If it's pretty easy, if you have everything ready for them, then it's going to be fairly easy for them to do, and it's not going to take them long to do it. So if you have something that's more in depth, it's going to take them a little bit longer. It could run you anywhere, I would say a couple hundred, maybe up to 400 if you have really a business that has a lot going on and you need a lot of advice throughout the year. It can go up from there. I think, I don't know if you have anybody talking about LLCs and all that stuff. If you have an LLC, versus not having that LLC, that's an extra level of complication for a tax return. So that would probably cost you more as well. So it just depends on how complicated that situation is. I will share this story. I had a tax internship in college, and basically I was taking the information and inputting it into the software, and guy comes in, hands in all these receipts, and my manager at this place was like, okay, well, you can go through all these receipts. And I said, why does this bag smell like Wendy's? And she goes, because they're all Wendy's receipts. He thinks that his fast food bills are all tax deductible. Your job is to figure out what isn't tax deductible and what is. That return took a very long time. He probably got charged extra for that. right? But if you hand them that P&L that, or even just, you can send them your work, but as long as those categories are in there and succinct and organized, they can do a subtotal on it in Excel really easily. Or give them your information from QuickBooks. I know some people give them access to QuickBooks, so they can just look in there throughout the year. But if you're a small farmer, not your main source of income, I would not do that quite yet. I would just hand them a total, here's my P&L for the year, and away you go. Answer your questions there. So.
Thank you, Sarah. I see another question from Emma. Could you talk more about how legal entity of your farm plays into this? Do you fill out a Schedule F only if you are a sole proprietor? What if your farm business is an LLC or corporation?
LLCs also have Schedule F. So if you have your farm separated out and it's an LLC, you will get that's K1 with it. And then, don't quote me on that, I think it's K1. Again, I'm not an official tax preparer, but you get a separate document. So you have your 1040, which is your personal tax return. Then you have your K1. And your K1 then gets reported on your 1040 for what you owe for taxes. So you're going to owe taxes for your LLC. And then if you get income from a trust or LLC, a C Corp, S Corp, all that stuff, that eventually, the IRS will know about that as well if you're an owner in one of those. So, but yeah, it's not just sole proprietors that will have those Schedule F on there. You'll basically have not the Schedule F, it will be the same type of thing as when you file taxes for your LLC or your corporation.
We have another question here about what standards do you use to pick a farm tax preparer, from Cedric.
Yeah, Cedric, that is a really good question. I asked them, do you understand farm taxes? I live in Pontiac, which is 100 miles south of Chicago. So I'm in a rural area, and I would like to say that we are flush with tax preparers down here, but farm tax preparers are retiring at an alarming rate. I would ask whoever you picked as your taxes, do you understand Schedule F? Do you understand farm? Most likely, most farms are run kind of like the same as any other business, which normally are put on other sole proprietors or sole proprietor businesses are on Schedule C. So it would kind of be the same concept for them, right? As you get bigger, as you get bigger, it may become more important to find that person that understands the farm aspect of it. But as you're getting started, they just need to understand businesses, okay? And yeah, I cannot tell you how many of my customers were told by tax preparers, well, if you don't make money 3 out of 5 years, it's just a hobby farm. They think that people who just do vegetables on a small space are just gardeners and hobby farmers. And that's absolutely not true. These farmers do make money at what they're doing. They may lose money to begin with, but they are profitable in the end, most of them, as they make changes and as they grow. So don't let a tax preparer scare you with that. Do those things that show you are working your darndest to make this a for-profit business, and that you are maintaining your records, you're saving invoices, all the things any other business does. Don't let them tell you you're a hobby farm if you are not a hobby farm, okay? What else?
I also see a recommendation for companies or individuals who are skilled at this.
Yeah. So I'm working on getting a list for Cook County. And if British has your information, if I get that list someday, I will send you. Right now, we're talking with SBFM in Illinois, that's Farm Business Farm Management. They have not really gone into Cook County and into the suburbs, and they mainly deal with corn and soybeans, but they know farms and they know farm taxes. Okay, so I have sent customers to them before who are small specialty growers, and they got the same thing that my family gets with our corn and soybean operation. They get a balance sheet, an income statement, and a tax return. They do their taxes and help them with tax advice, right? As soon as I find an official list, I'll give it to you. I also called down the University of Illinois Tax School and said, hey, if you guys have anybody going through your tax schools this year who is in the suburbs or the city and would be willing to work with
farmers within the city limits or in the suburbs, let me know. And this is not just an issue, like I mentioned, just for Chicago and Chicagoland area. It is outside of Chicago too that we are having our tax preparers retired at an alarmingly high rate, and we need to fill those back in. So I will say, anybody who has an accounting background or has done office work before and wants to do something in the off season when it's cold and you can't farm, find a tax accountant to help with taxes and get trained to do farm taxes, because I will have business for you someday. So what's the next question?
I see a question regarding, let's see. Must you work with an accountant slash tax preparer locally? Could you work with an accountant familiar with farm businesses, but not based in your county, if you can find them?
Yes. Yes. My mom works for an attorney here in Pontiac who does taxes, and they have clients from all over the country. I don't know if they have international clients, but you can choose anybody you want. You're going to need somebody that understands Illinois state taxes a little bit, but as long as they're a certified tax preparer, you're good. And again, they may have never done farm taxes before, but if they've done business taxes, that could be a good way to start. As you get bigger, that's when you're going to see a little bit of an issue, right? As you're smaller, it's all kind of the same. As you get bigger as an operation and there's a lot more money involved, that's where having somebody that understands farms is going to be to your benefit. Because they're going to be able to look ahead and say, well, maybe we depreciate this out over 5 years, but then in 5 years, you're going to, or in 2 years, you're going to have this. You're going to need to invest in this, and maybe we don't do it this way. They're going to understand the road ahead and where you're going with that. That's a very good question. You can go outside the county. So if anybody has anybody outside the county that they use for their operation and they really like, email me. I will take their name and give them a call and make sure they're good with me adding them to the list. But yeah, I will gladly take recommendations if you have someone you really like. So any other questions? Okay, if you guys are attending my next one, I'll go more in depth as far as balance sheets, cash flow projections. The other thing I can send you is templates for all these financials that we use. So if you want to email me and say, hey, Sarah, can you send me a template for a profit and loss statement? I will gladly send that to you. Or template for a balance sheet, which again, I'll explain what a balance sheet is in the next session. But I can send you any of this stuff if you just email me, or email British and British will let me know and I can send it to her. So if you have any questions, again, don't hesitate to use my cell phone or my email. You're welcome to use those anytime.